Good evening. It's Vijay here. Welcome to Reflections on a Sunday. Today is Sunday, 23rd November 2025. As I had mentioned last week, that I will do a small video on bubbles in the past and what we can learn from them. Now, first of all, the question we would ask is India in a bubble or are the global markets in a bubble? Now, in my opinion, the global market, especially the US and Europe, Germany to some extent, and Japan, these three countries are in some sort of a bubble, with US being the biggest bubble of them all. And the biggest bubble is led by AI, and therefore S&P and Nasdaq are in a bigger bubble than even Dow Jones. This is what I can see from what is happening in the markets over the last say 1.5 years. So whether India is in a bubble or not, we will discuss. But let us just discuss about what happened, in the past bubbles. So just let's go back to 1992, 91, 92, where that's the famous Harshad Mehta bubble. So if you look at it, say sometime between July 1991 and April of 1992, that was about 10 months. We had the Sensex, there was no Nifty. So I have now taken only Sensex numbers because, Nifty came only in 1996. So Sensex went up about three times within about 10 months, you could say, between July end and March end. So that was a huge moment in just a very short span of time. And the last 3 months, that is January, February, March of 1992, the Sensex actually went up 2.3 times. In fact, January 1992, Sensex just crossed 2000. By end of February, when the budget took place, those days budget used to be end of February, it had gone to 3000, so 50% from there. And then when everybody was complaining of a bubble, it went to 4500, another 50% from there. So bubbles, you can say is a bubble when there is a sharp and swift movement within a small period of time. So this you could easily look at it and say it's a bubble, but nobody knows when it will burst. Now, if you take the next one, was the dot com bubble. Again, dot com bubble, if you take somewhere end 1998, when UTI went bust and things were very bleak. From there, if you calculate to what happened in February 2000, February 2000 was the peak of Sensex. The dot com bubble burst only in March of 2000. So there were two parallel tracks running. The Sensex, which didn't have any of the IT companies or the dot com companies, that actually peaked out in February of 2000. Whereas the ICE stocks, as they call it, information, communication, and entertainment stocks, which were going with Nasdaq. Nasdaq was in the bubble then, not Dow Jones. So the bubble started somewhere after budget, and then it went up significantly by 1.5 times in the last, about say, a month and odd. These are weekly charts which I'm showing you here. So this also one could say it is a bubble, especially the way it went up in last just 1.5 to 2 months. Then you take the Great Indian Bull Market. The Great Indian Bull Market was it was not a real bubble for the most part of it. If you look at it from, say, let's say we started on May 17th of 2004, actually the bull market started somewhere in April of 2003. So if you take that out, there was a rally up to January 2004, and then it fell off. After the elections, there was a double circuit, and let's take that May 17, 2004 as the bottom. And if you look at it, it went up 5 times in 3 years. It was a very good bull market. That's why I call that as the Great Indian Bull Market, which we have not seen in the past, though we have seen bubbles in the past. This, I didn't think it was a bubble until it came to August of 2007. Now, by August of 2007, the subprime market had started showing its true colors. So while the Dow Jones was hitting newer and newer highs, just like the Nifty and the Sensex, the S&P was in a sideways market and Nasdaq was actually in a bear market. So that I don't think was really a bubble till somewhere, I would say, till August 2007. Between August 2007 and January of 2008, the Sensex went up by 50%. That is hardly, you can say, September, October, November, December, 4 months, and January 15th, January 10th or something was the high. So you can say about 5 months. 5 months, 50%. That was a huge move, and that clearly showed that India was in a bubble territory, though globally the markets started falling off after October of 2007. So in October, November, December, the 3 months plus 10 days of January of 2008, we did not care for the global markets because everybody said that the money from the global markets where there is selling there will come into India. Something similar which people are talking now, that the global market there is a bubble, the money from there will come to India. And it did not come actually. No money came from India, so no money came from global markets to India during those 3 4 months. Only Indian money took it up. Indian money and the third force. I always talk of third force, which is now the major seller here, apart from the FIIs. At that point of time, the third force actually was, buying like the Indian mutual funds. The only sellers then were the FIIs. Now, if you take what happened after pandemic, now if you look at it in retrospect, you can say there is a bubble from in the pandemic time. After the pandemic bottom, which was somewhere March 2020 till September 2024, the steady rise was there. Then the last few months in 2024, let's say the first part of 2024, especially in the mid cap and small cap and micro cap, the rally was severe. So the market topped out in September 2024, and now we have only come and trying to hit a double top. If you look at the pattern, there is no sign of a bubble because what has happened is it has gone here, made a bubble top, I would say, as far as the broader market is concerned, not as much as the Nifty and the Sensex is concerned, because this has been growing steadily 3.33 times in 4.5 years, especially after the pandemic low, which was a terrible low. It had fallen 40% from the January highs of 2020. So it really crossed that only in October, September, October, I think November it crossed the highs of 2020, and then it took off. So it is really not, it was more like, as I said, between 2004 to 2007 August. This last leg was where the mid caps and small caps pulled the large caps also. So you had large caps like Lever or Colgate, which have went up by 40-45% in 4 months, which people don't remember because nobody was buying Lever and Colgate during those months between March and July of 2024. So this, I would say, this bubble, pandemic bubble happened in those 4 months, 4 6 months, you could say somewhere between January, March to say July of 2024. Subsequently, the market fell off, and then now it has just gone and trying to hit a double top. So where are we are not certainly in a bubble, but we could be in difficult times because if the whole world is in a bubble and if it starts crashing, then I do not expect that money from abroad will come into India. This is my thinking based on what I'm observing here. And what this present condition, what I'm seeing, is very similar to what happened in 1994 when we had a double top. If you see here, in 1992 to 1999, in 1992, the Sensex hit about 4,500, then there was a crash because there was a bubble, and then it bounced back to the same level or slightly higher than 1992 level by 1994. So something similar, a double top happened, and then the market fell, and then the market fell because of what? It fell because IPOs came in plenty during that time. Between 1994 and 1996, for instance, there were, I think, about 1,500 IPOs per year. Per year, of course, the amounts raised then was very low, but still IPOs sucked all the money, like what is happening now. So when you saw a double top in 94 in September, the market did crash because of liquidity problem. There was really no bad news. So if we are going to get a fall now, it may not be because of FIS increasing their selling. It will is most likely to be because the local guys are coming with IPOs, and the third force has now moved towards the FII, which means they are willing to sell at all rallies. If you look at what the big guys who are the decision makers, if you take Kotak or you take HDFC Securities, you take SBI, all of those people are very cautious, or ICICI. So when people at the top are cautious, especially in the index, it's unlikely that the index will go up significantly from here. Though I was thinking there could be a bubble in our markets also in line with the US market, and we may reach around 28 to 30,000 is what I originally thought in June. The reason I've been cautious for last few weeks has been because of the deluge of the IPOs, and they're not stopping. And there's another 30,000 crores IPOs waiting apparently in December. And then you have the Geo IPO and further, and there is people are talking of a lakh and 50,000 crore worth of IPOs in the first few months of 2026. If that is going to materialize, I do not see how markets will go up significantly from here. They may make a new high. It is not something uh, unusual. So they may go even to 27,000, but I don't think they will sustain, because the moment the market goes up, the IPOs will start coming in, PEs will come and start selling, and promoters will start selling through their block deals. And of course, the influencers will also sell. You will have the PMS, AIF, family offices, corporate treasuries, and all will come and sell. I have no doubt in my mind on that. So now what should one be doing? Okay, this is my predict. This is not a prediction. This is what my probability. This is what will happen. But should we run away from the market? I feel that if you go back to history and see between 1994, you forget 1992, 92 and 94, the double top here, between 94 and 99 October, when Mr. Vajpayee won the election with a big majority in 99 October, till that time it was a sideways market. So we could have a sideways market because there is one side liquidity is there, but the other side liquidity is being taken off, and the fundamentals have improved. You see, the fundamentals are not bad now if you really look at it in terms of corporate profits, especially in banking, autos, and pharma, and even defense. There are number of sectors which are doing well. So these sectors could hold the market, like what happened between 94 and 99. There are many companies which did very well. Companies like IT companies like Infosys, Satyam, they all did very well during that time. Hero Motors, autos did very well. Tech did well, autos did well. So there were companies, even Reliance Industries did well. So you will have companies which will do well even in a market which I would say long term sideways. We could get into a long term sideways. I think Mr. Shankar Sharma talks of a 5 year long term sideways. He also likens it to the 94 to 99. I am thinking that is it is a possibility. I do not know whether that is what will happen, because what has happened is during those days the FIs were not strong. We were not aligned to the global markets. We became aligned to the global markets only during the dot com boom, which was later, 1999. So those 4 5 years, Indian promoters, Indian mutual funds, Indian, the high net worth individuals, they supported or they sold in the market. So the foreign influence was not so severe, but lots of good things happened during that time. Yet the market did not go up. So if you say lots of good things can happen in terms of inflation, GDP growth, and all that, it is not necessary that the market will go up, because market runs on liquidity. So first of all, my thinking is we are certainly not in a bubble. We may be overvalued in certain sections of the market, especially railways, and to some extent defense will may be overvalued, and some pharma stocks, some FMCG stocks will be overvalued because the growth rates IT stocks are also overvalued in my opinion. But on the other hand, you have autos, you have banks which are doing very well. So we and metals also are doing well. So there are sectors which are doing well, and there are sectors which are overvalued, but they are not bubble territory. However, because globally markets are under pressure, especially because of AI, we may not be able to really go up too much from here. So one has to adopt a cautious stance. At least we are doing that, but we are selecting our stocks. We believe that in a sideways market, these are the stocks which will do well. That is why we are in precious metals, we are in base metals, we are in PSU banks, and we are looking at some auto ancillaries. So all this is what our strategy is. Whatever you do, I hope it is successful. Thank you for joining me. Have a nice weekend.